So you want to buy a home, but you don't necessarily understand the process. I'm going to break it down for you in this video. Dr. Adrian Gentry, aka Dr. Real Estate Jack. So I'm sitting here about to show one of our properties for a potential customer. And I get a ding notification. And they're asking me, how do I start the process? And what does it look like? This is probably a question I receive 3 or 4 times a week. So I wanted to shoot this quick video. Hopefully I can get it done in about 10 minutes. You have to understand, pretty simple process. However, sometimes it's not easy. Where I generally start when I'm talking about the process of buying a home is finance and credit. So finance, there are 4 different types of loans: conventional, FHA, USDA, VA. So in this video, we're going to focus on FHA and conventional since most of the time they're attached to first-time home buyers, and they both have down payment and closing costs. The USDA loan is more rural area. We're in Jacksonville. We don't have a lot of rural area. Don't want to stay on a farm. Most people don't. We're not looking at USDA. VA, you want to listen to this because we'll talk about the closing cost requirements, but down payments, 0. So conventional, FHA. As a general rule of thumb, I look at 700 plus conventional. 700 and below, we're looking at an FHA loan. Just as a general rule of thumb, as you talk to your mortgage professional, they'll be able to break everything down for you. Now we're looking at FHA. FHA has a 3.5% down requirement. There are a lot of down payment assistance programs, but we won't talk about those in this video, where they will cover your 3.5% down payment. Conventional, 3% down, 5% down, 10% down, 20% down. That's where most people come up where you need 20%. Well, the 20% is actually to lower the loan to value ratio, so you do not have to pay mortgage insurance. That's where that comes from. So for closing costs, factor in 2 to 3% of the loan value. Let's break this down real quick. If you're looking at a $100,000 house, 3.5 on an FHA loan will be $3,500. $3,500. Closing costs around, let's say 3%. We're looking at generally $6,500 to close on that property for $100,000. If we're looking at just 3% on a conventional loan, we're looking at the exact same values. So I know people are asking, but I heard the seller could pay concessions or provide me money towards a loan. Absolutely, they can. Seller's market, they're not doing it. It's not happening. So just factor in that 3% when you're going to purchase a property. Is it possible? Yes. Is it likely that the seller will give money back towards your closing costs in this market? No, don't do it. Now, once we've looked at our finance, we look at credit. Now, credit score is very important. Of course, we know to own a property, but you don't have to have premium credit. When most people start the home buying process, the first thing they think about is, I have to fix my credit. And I ask you to talk to a mortgage professional or credit specialist because of this. Sometimes you can pay things off that don't necessarily need to be paid off, and the mortgage company isn't even looking at it. So you can waste thousands of dollars that could have went towards the finance portion of your home, but not realize that you don't need to pay it off. So get someone to look at your credit. Second, you can agitate something on your credit, and now it's hurting your credit score more than raising your credit score. So make sure you talk to a mortgage professional, a credit specialist first. So after we've kind of looked at where's your credit rating and we've looked at the financial details, now it's time to get pre-approved. So the pre-approval process, they're going to ask you for a lot of documents. And I tell people to get pre-approved versus pre-qualified. The reason being is this. A pre-qualification is basically the thing that you get in the mail after they've done a soft pull on your credit, and now they're saying you qualify for this credit card of $50,000 and you haven't given them any information. Do not think that a pre-qualification necessarily means you're approved. Through a pre-approval process, they're going to ask for a lot of documents. So they're going to ask for your bank statements. They're going to ask for your tax returns. If you're a W-2 employee, they're going off the gross. If you are a business owner, they're going off the net. So you have to take the punch in the chin if you're thinking about buying a house, business owners, because we try to write off everything. Now, they're going to ask for everything besides your newborn child. They're going to get into your stuff, and this process generally takes a week or two to actually get pre-approved. So you want to make sure that you have all the documents in order, ready to go before they ask for them. Remember, a pre-approval means they have looked at all the information pertaining to that loan and you qualify. A pre-qualification means your credit score qualifies, but guess what? We haven't checked anything. So pre-approval over pre-qualification any day of the week. And guess what? It holds more strength when you're actually putting in an offer to majority of real estate agents. Just wanted to put that out there. Now we're pre-approved. It's time to search for a house. We do not search for houses before getting pre-approved. And some people say, well, I want to look at houses. I want to start the search. This is the problem. It generally hurts in two ways. One, you begin looking for properties that you may not qualify for. And then once you actually get pre-qualified, you see that you may not get that HGTV home that you were looking for. Two, when putting in an offer, we need that pre-approval letter. That pre-approval letter says that I have been vetted and I can close on this property. Being in the seller's market right now, you don't even have time to look at a property and then go back and get pre-qualified. You do not have that time. You have to have that when we submit the offer on your property. So there is no time to wait, because now in this market, houses are going in hours. Houses are going in days. They are not taking weeks. It generally takes my customers a month or two in a great market. Seller's market, a little bit harder because we're putting in more offers to get offers accepted just because there's so much competition in the market. So after we found that home, what I generally do is go pull a CMA. Meaning I'm looking for comparables in the market to make sure that that house is priced appropriately and give suggestions toward what we may offer on that property. We want to ensure that that property is worth what the seller has listed that property for. After we submit an offer, there's only three things that can happen. It can be accepted. When we partying, right? You got the house. Or it can be rejected. Don't worry. It happens in this market, right? Rejections are super common right now. Or it can be countered. So a counter offer saying, I love your offer. We want to accept it, but will you accept a couple of our terms as well? After we vetted that, we say yes to it. We sign off on it. We back in party mode again. We got that property. So after we've gotten the property, we have 3 days. On every contract I write, we have 3 days to get your money into escrow with the title company or the attorney. Now starts the inspection period. So the inspection period contingency is generally 7 to 10 days, meaning we can hire an inspector. It's going to cost between $300 and $500 for an inspection. We go in, they look and check out the property. We make repair requests. If there are repair requests, if there's something terribly wrong with the property, we can now back out the contract and move on, start the search again. So after that 7 to 10 days, you accept the house. We've made the repair request. They've said, yes, we will do certain things. No, we won't do certain things. We move into the loan underwriting and title work phase. Now, closing on a property generally takes between 30 and 45 days. The underwriter will be asking you for a lot of documents, so please be available during this time if they have to firm up anything. Some lenders, not all, will underwrite your loan prior to make the process much easier, and it helps us a lot. If you're closing on a property cash, it's only going to take however long it takes the title work. Now, during this process, the title company is doing title work. They're looking for liens. They're looking for any judgments. They're looking for any clouds on that title to ensure that you're moving in a property and nobody's going to come try to take it right after you get it, and that everything has been paid off at the time of closing. Once again, generally takes about 30 to 45 days to close on a property when you're utilizing a loan. When you're utilizing cash, it can be much faster. So after the 30 to 45 days, after we've looked at our finances, after we've looked at our credit, after we've gotten pre-approved, after we've done the search, and there's a lot of emotional ups and downs there. Then we're doing the underwriting, then we're doing the title work. It's time to close. Now, going to closing, it's going to take you 30 minutes to an hour, right? In and out. You're going to sign all the documents. Some of them are going to be repetitive, the exact same documents over and over again. But we're going to sign all the documents and you're going to get the keys. After you get those keys, it's going to feel amazing. Now it's time to take those pictures with our soul signs and then, do a little jig so you can throw it up on Instagram, boomerang, homeowner. But that's it. Like, that's literally the home buying process in a nutshell, broken down real quick so you can understand it. If you have any questions, put it down in the comments. Also, reach out for a consultation. And I like to sit down with people and tailor a program for them specifically versus you saying, okay, I just need to get all my money together. I might just need to fix my credit. No, talk to someone. Don't try to go at this process alone. We're here to help you, right? Like, realtors are here to help you. Mortgage professionals are there to help you. Don't just assume this is where I have to begin. Sit down, talk with someone, identify where you are, because I tell people all the time, most people are closer to buying a home than they realize. Some people already qualify and are just afraid to walk through the process. They need someone else to put eyes on it. So if you're in that stage, just click on the button down below, my calendar, set up an appointment. We can have a buyer's consultation and find out where you are in the process. Most people qualify. It's interesting how many people believe they don't qualify. And after we speak, they qualify on paper. And all we have to do now is go through the pre-approval process. So thanks so much for watching the video. If you have any questions, drop them in the comments, and be great and choose excellence at everything that you do.